Hello there, everybody. So, if you've been paying attention to business news, then you know stocks are on fire right now. I think in the last 2 weeks, my portfolio has gone up probably about $2,000, and it's been fantastic, and it continues to climb. Now, the thing about this is that if you're a beginning investor, what you need to understand is time in the market is the most important thing. Like a lot of people think you gotta have perfect timing. No, not really. What you got to do is you got to be in the market already. So when you have good days like we've had the last couple of weeks, you're already invested, and then your investment grows. So time in the market is more important than trying to time the market. A lot of times people want to say buy low, sell high. They're waiting for that perfect opportunity to buy low. That's the wrong strategy. The strategy is you want to be a long-term investor, and the length of time that you're in the market is more important than anything. This is what's going to help you generate wealth. It's perfectly okay to buy the dip. That happens. There may be a 10% correction, which is routine, and that's a great buying opportunity. But many people believe you should be doing what's called dollar cost averaging. And that is, every week you're going to contribute to your investment no matter what the price is. Every week you're just going to continue to contribute. And the idea is over time, it's all going to average out, and you're going to be in it for the long run. And so when the stock market has gone up because all these trade policies are being worked out. The threat of tariffs is starting to wind down. And maybe the Federal Reserve will lower interest rates, and maybe they won't. But the stock market continues to climb. It's a great opportunity. It really is. Right now, if you're invested, you're loving it. This is fantastic. If the Fed lowers interest rates this week or in September, it's only going to continue to go up. Many people believe we're in the beginning of a new bull cycle because of all the things the new administration has put in place, like the big beautiful bill, tax incentives, reshoring manufacturing, working out trade deals, uh, creating new jobs, AI revolution, all this positive economic news is creating a new bull cycle. Well, in order to participate, in order to take advantage of this opportunity, you have to be invested. If you're sitting on the sidelines because you have cold feet, you're missing the boat. you know, you better get on the ball. Because these opportunities don't come along very often. Uh, you know, it, you look at there's probably 3.5 years left of this administration. Who knows what kind of administration we'll have next? And you may not get a pro-business administration like this for decades, or in your lifetime. This may be like once in a lifetime type of administration. The last time I saw this much optimism in the economy was during Reagan in the 1980s. We had just come off some bad years with Jimmy Carter. Inflation went through the roof, and Reagan came in, and he cut taxes and he cut regulations, and they called it the Reagan boom, and it lasted for probably about 2 decades. That economic policy, pro-growth policy, lasts for 2 decades, and we never had another president like that since then. We haven't had another administration like that ever since. I mean, that was you say 1980, 1985 time frame, and it took all the way up to Trump 2016, and it really didn't get as much done in his first administration as the second. So say 2025. So from 1985 to 2025, all those decades, we did not have as good a pro-business administration. So we have one now, and it's at the beginning of the cycle. If you think, you're waiting for a better, rosier picture, that probably isn't going to come. I mean, it's as good as it's going to get. Um, Now, freight will pick up because economic activity will pick up. But as freight prices climb, truck prices will climb. So you got to keep all this stuff in mind. The direction of the economy is moving up. You know, everything, the GDP, the tariff revenues are record high. All the economic indicators are positive, very positive. And as a result, Wall Street is reflecting all these changes in the economy. And if you're invested, this is fantastic. It's never been so good. Uh, companies are going to be posting record earnings and record profits. And if you think, long term, this is how you're going to generate wealth. It's through your investment, your portfolio. So if you're one of those truck drivers who doesn't know a lot about investing, that's okay. A lot of people don't. And, a lot of people are financially illiterate because they don't teach it in high school and they don't teach it in college. And maybe your parents didn't buy stocks and things like that. And you weren't raised with it. That certainly is true for my family history. It's like nobody bought stocks. Nobody did that. Nobody could afford that. Things have changed over the decades. Apps like E-Trade and Robinhood, and every bank account now has brokerage features. Uh, everybody's starting to invest. Everybody's doing it on their own. Decades ago, nobody did this. Nobody had a broker. Nobody had a brokerage account. You either had a pension or you had a 401k, and that was it. No one had an individual brokerage account, except for like extremely rich people. And I remember when I first started investing, even on E-Trade, they charged a $20 commission for each and every trade. So even when I was trying to learn how to do it on my own, it was still very expensive. And then competition came in, like Robinhood and other trading platforms, and they had to remove those fees for commissions. And it just got better for the retail investor, the individual investor, because now you can buy and sell like crazy and not have to pay that $20 fee. And it really freed up the trading activity. So more and more people are jumping in to having individual brokerage accounts. It's really incredible when you think about the earning opportunities, because you know on a S&P 500, for example, the historical average is 10% per year. That's the average. Some years it goes up 25%. So you think about how can you work smarter, not harder, all these cliches in trucking. Well, you could say the same thing about investing. Can you make money without actually working? It's you make money while you sleep. You make money because you're already in the market, and when these great days on Wall Street happen, a rising tide lifts all boats, including yours. So over the last 2 weeks, my portfolio has grown $2,000. I didn't even touch it; it just grew on its own. So I think it'll continue to grow. Many economists believe the second half of 2025 is going to be much better than the first half. Because all the trade issues are, for the most part, worked out. Here we saw recently the EU has reached a trade agreement. Japan, Indonesia, and the Philippines, big trading partners, all reached trade agreements. So I think for the most part that trade has been worked out. I think there's some lingering issues there with China, but almost everyone else has had a deal worked out. And as a result, Wall Street is responding positively. Now, in order to participate, in order to take advantage of all this, you're going to have to put some of your money at risk. It doesn't mean you have to go crazy risky, but investing in stocks and ETFs and mutual funds has more risks than your checking and savings account. But your checking and savings account isn't earning you any money. None. I mean, most banks offer you zero or maybe like 0.1%, something minuscule. Um, So I recommend following, if you haven't already, look up a guy on YouTube called Professor G. He has a three fund portfolio. I'll put links in the description when we're done. He even has a three fund portfolio by age. So if you're younger, you probably would take on more risk than if you were someone who were older. But basically three fund portfolio is like a foundation of your portfolio, and it typically will include something like the S&P 500, which you can find under Charles Schwab, or Vanguard, which is VOO under Vanguard. That would be the S&P 500. And then he also recommends a dividend fund, which is SCHD. It's a high yield dividend fund. And then a growth fund like QQQM, which is technology. That one has more risk than the others, but it grows faster. So that would be like three examples of three fund portfolio. And those are all performing great. They're performing fantastically. And when you think about long-term wealth and your retirement, where would you like to be when you reach age 60 or 65 or 68? You know, do you want to be a millionaire? I don't see any reason why any truck driver can't become a millionaire if they do long-term investing over a 20-year period. But you got to get in the game. You can't be on the sidelines. Like right now, if you're not in the game today, you missed the boat for the last 2 weeks because the stock market went up. And you gotta get over that fear of losing. Um, and if you diversify your portfolio, like that three fund portfolio, that's pretty diverse. That lowers the risk. It's going to be fine. And those times when the stock market does go down, like during the pandemic, it went down significantly. It always comes back up. In my lifetime, I've seen these crashes repeatedly. 1989, 2007, 2008, and then 2021 during the pandemic. Major crashes. But guess what? It always came back. It was just a momentary drop in the stock, and then it always comes back. Because you got to remember, nationwide, people are contributing in their 401ks and in their pension plans. Hundreds of millions of people, are contributing to 401k every single week. So that money is being fed into Wall Street every single week. So when the market comes down, new money's coming in and it comes right back. The money never stops; it keeps coming. So it may go down, but it always comes back. So when you think about that, you got 20 years to retire, and you like to become a millionaire by the time you retire. Well, you got to put your money in the market. You know, Obviously you got to have some set aside for emergencies, but you got to start investing. You got to get over your fear of investing. You got to learn how to do it. And time in the market is always better than trying to time the market. All right, guys, that's all I got for you. So watching. We'll see you on the internet.